Happy Friday, Brian Manning here with the weekly update. Let's get right to it. So, Monday this week, we had some changes at the CFPB. That's the Consumer Financial Protection Bureau. Had a new director put in place there. They sent home about 1,700 people that work there. They were told everybody to stop working on what they're doing. We'll have to wait and see what happens with the fate of the CFPB. I'm not really sure what they're going to do. It's kind of up in the air right now. This is definitely one of the big governing bodies for the banking system, mortgage lending, etc. So we'll have to wait and see what happens there. That's definitely stirring some waves in our industry. Tuesday this week, we had Jerome Powell speaking. So Jerome Powell's talking. He said inflation is moving closer in line with what he wants to see. Also, he says employment is looking solid in the U.S. economy. You know, one thing I'm watching, and no one has talked about this yet, so I don't know if this is accurate or inaccurate, but I'm curious to watch this and see what happens, is the Federal Reserve has two mandates, right? One is price stability, so that is controlling inflation in the U.S. economy. Number two is employment stability. I'm curious to see with this dodge and everything that's happening in the U.S. government right now, with the amount of people that are potentially being laid off or let go, when those people become unemployed, is that going to have an increase in unemployment? Because if the unemployment numbers increase, that's actually going to be a potential cause for the Federal Reserve to cut interest rates. So again, no one's talked about this yet. I have to wait and see what happens. But if the Federal Reserve's second mandate is employment stability in the U.S. economy, and we start to see a lot more unemployment, at that point in time, that potentially could be a catalyst for future Federal Reserve rate cuts. Wednesday this week, we got CPI, so that stands for Consumer Price Index. CPI was hotter than expected. It came back being up 0.5%. Expectations was it would be up 0.3%. Markets did not like that number. Actually, we saw mortgage rates worsen on Wednesday this week because it was a hotter than expected inflationary report. Then Thursday this week, we got PPI. Actually, let's go back to CPI. Culprits of CPI. So if we look at what was the cause of inflation in the month of January in the U.S. economy, one was used cars. Another one was car insurance. Another one was shelter, primarily in there what's called lodging away from home. So if we strip out those items other than eggs and we look at what's happening in the U.S. economy, most goods stayed really stable in their pricing, though, but those were the areas that were really the culprits to have us see an increase of inflation in the CPI report in the month of January. Thursday was PPI. So PPI is the producer price index, that measures inflation at the wholesale side. So PPI was up 0.3%. That was really in line with expectations. Markets actually liked that after we got a relatively poor inflation report the day before on Wednesday when interest rates went higher. The PPI report was very helpful. That caused interest rates to move lower, which is great to see. Today, Friday, we get retail sales. So retail sales really looks at and measures the strength of the U.S. Consumer. So retail sales was actually down 0.9%. It was expected to see retail sales down 0.3%. So right now, consumer debt, so we look at credit card, consumer debt right now is at a level of $1.2 trillion for credit cards. So I'm definitely starting to wonder if the consumer is kind of getting maxed out or if they're tapped out, because consumer debt right now is 41% above where it was in pre-COVID conditions. So we're seeing credit card debt at an all-time high. You know, credit cards have a limit. So if the consumer is getting maxed out, if credit card debt is at an absolute all-time high, and is substantially higher than COVID, and consumer doesn't have the ability to keep spending, at that point in time, that could continue to slow down consumer spending in the U.S. economy, which could slow down the economy as well. So I have to pay attention to that. But that was news as well that definitely helped mortgage rates. So it was kind of a seesaw for mortgage rates this week, right? Wednesday, we saw rates move up because of that CPI report. And then Thursday, Friday, we've seen rates make a definite nice move lower, which is amazing to see. One more thing I want to look at here is something about delisting. So I've seen a lot of media about the housing market and delisting, right? So this is about properties that were on the market in December and were taken off the market. And there's so much talk about, oh my gosh, this is like such a large number. So put together a graph here that goes back to like 2004, 2005. And this shows the monthly delistings, right? So if we look at what's happening in the marketplace, 04, 05, this is right now. Did we see a spike this year in delisting? Yes, or excuse me, last year, 2024. We did. But if we look at this, every single year, we see a spike in the month of December over and over and over. History repeats itself every single time if we look at this. So yes, we did see a spike here in December. Was it higher than normal in the last couple of years? It was. But if we look at interest rates in the month of September, October, November, December, or really maybe October, November, December of last year moved higher than where they were in, say, August or September. So when you had a bump up of interest rates last year, which we've seen them come down nicely now, but if you have that bump up in interest rates going into what would historically be those slower months, such as November and December for home sales, you're going to have more inventory than normal. So I was not surprised at all to see this bump up. And I'm not surprised to see a higher number in delisting, but you got to watch the media, because the media is definitely doom and gloom, and they would make it sound like the housing market is just crumbling right now. But if we go back and we look at every single year, homes always get delisted in December. This year we just had more than normal because everything I just explained. I'm around all weekend. If you have a buyer that wants to get pre-approved, give me a call. I'm available 7 days a week, 8 a.m. to 8 p.m. Realtors, we have Winning the Listing presentation going right now. I love this content. We've done 4 of them so far. I just did a presentation in Colorado Springs this week to a sold out crowd. It was phenomenal. Next one's coming up next week, Wednesday, Capitol Grill in Denver. We got 3 seats remaining until that's sold out. If you want to make it, definitely RSVP. We're having such a great time doing this class, and we look forward to seeing everybody there. Happy Friday. Hope you have a great day.